You check your bank account, $412. You feel a little proud because for once you didn't overdraft this month. Meanwhile, somewhere, a billionaire who already has $2 billion just made another $340 million without working harder, getting a second job, or clipping coupons. He simply existed and his wealth kept growing. It doesn't seem fair and it doesn't make sense at first, but once you understand why, you'll never look at money the same way again. My name is Chase Hamilton, and I spend way too much time thinking about finance ideas that almost nobody explains properly. Everyone obsesses over becoming a millionaire or even a billionaire. But very few people talk about how billionaires become multi-billionaires because that jump follows completely different rules. Today, we're breaking down the 5 real reasons billionaires multiply their wealth, and the third reason is the one quietly keeping millions of people broke, even those earning 6-figure incomes. First, compounding eventually stops feeling like simple math and starts acting like a machine. Most people understand compound interest in theory, but never truly experience its power. If you invest $1,000 and earn a 10% annual return, you'll have $1,100 after 1 year, a gain that feels small and forgettable. But if you already have $2 billion, the exact same 10% return creates $200 million in just 1 year. At that scale, the return itself is larger than most people's lifetime earnings. While ordinary people focus on saving money at the grocery store, billionaires are deciding what to do with the profits generated by their existing wealth. You might think that's only because they started with more money, and you're right, but that's not the real lesson. The second reason is access. Most people think the stock market is where fortunes are made, but in reality, many of the biggest fortunes begin long before a company ever goes public. Billionaires and private investors often buy into promising businesses years before regular investors even have the opportunity. By the time everyday investors purchase shares after an IPO, much of the explosive growth has already happened. Imagine buying concert tickets directly from the venue before anyone knows the artist is famous, while everyone else is forced to pay triple the price on resale websites. Money at that level doesn't just buy investments, it buys access, and access creates opportunities that most people never even see. The third reason is mindset. Billionaires don't necessarily predict the future better than everyone else, they simply think on a much longer timeline. Research has consistently shown that average investors underperform the market because they panic during downturns and sell at the worst possible moments. Billionaires also experience massive losses, sometimes hundreds of millions of dollars in a single day, but they understand that temporary declines are simply part of long-term investing. They treat a market crash the way you treat a red traffic light, inconvenient, temporary, and not worth abandoning your entire journey. Most people think in months, while billionaires think in decades. They're playing chess while everyone else is playing checkers. The fourth reason is ownership. Imagine earning $80,000 a year. It's a solid income, but the moment you stop working, your paycheck stops too. Billionaires don't rely primarily on salaries. Their wealth comes from owning businesses, stocks, and assets that continue creating value whether they're working, sleeping, or relaxing on vacation. Ownership is the engine that generates wealth without constantly trading time for money. The biggest financial difference isn't between poor and rich, it's between renting your time and owning assets. Even owning a small percentage of a business or consistently investing in index funds moves you from being only a worker to becoming an owner. The fifth reason is diversification. If you lose $2,000, it might ruin your entire month. If a billionaire loses $200 million, it's often just one small part of a much larger portfolio. They don't expect every investment to succeed. Instead, they spread their money across many different opportunities, knowing that a few failures won't matter because the winners will more than make up for them. They don't gamble everything on one idea, they make many smart bets instead of one desperate bet. So what can you actually do with these lessons? Start by automating your investments, even if it's only $200 per month, because consistency creates compounding over time. Focus on building relationships, skills, and networks because access often creates better opportunities than chasing the latest hot stock. Extend your investing timeline and stop making emotional decisions during short-term market crashes. Begin owning assets, whether that's index funds, company shares, or even a small side business, because ownership is how wealth grows while you sleep. Finally, diversify your investments so one mistake never defines your financial future. The truth is that the gap between $412 in your bank account and $2 billion isn't just intelligence, it's mindset, ownership, access, patience, and time. Those are things you can begin building today, regardless of how much money you currently have. You don't need billions to start thinking like a billionaire. You simply need to start.